Welcome to our channel. Today we're diving into the relationship between the NASDAQ and Bitcoin. Have you ever wondered if the performance of tech stocks and cryptocurrencies are connected? Let's explore this topic together. First, let's briefly understand what NASDAQ and Bitcoin are. The NASDAQ is one of the world's largest stock exchanges, heavily weighted towards technology companies like Apple, Amazon, and Google. Bitcoin, on the other hand, is the first and most well-known cryptocurrency, offering a decentralized digital currency. Historically, there has been a noticeable correlation between the performance of the NASDAQ and Bitcoin. This means that when the NASDAQ performs well, Bitcoin often follows suit, and vice versa. But why does this happen? One key factor is market sentiment. When investors are optimistic and willing to take on more risk, they often invest in both tech stocks and cryptocurrencies. For example, during the bull run of 2020 to 2021, we saw a surge in both the NASDAQ and Bitcoin prices. Investors were confident, driven by low interest rates and stimulus measures, leading to increased investment in riskier assets. Economic factors also play a significant role. Let's take interest rates as an example. When interest rates are low, traditional savings and bonds offer lower returns, prompting investors to seek higher returns in tech stocks and Bitcoin. In contrast, when interest rates rise, both markets can experience downward pressure as investors move back to safer assets. However, it's essential to understand that this correlation is not always perfect. Several factors can cause divergence between the NASDAQ and Bitcoin. Bitcoin is particularly sensitive to regulatory news. For instance, in May 2021, when China announced a crackdown on cryptocurrency mining and trading, Bitcoin prices plummeted. This regulatory move had a significant impact on Bitcoin, but did not affect the NASDAQ to the same extent. Another factor is market maturity. The NASDAQ is a well-established market with decades of history, while Bitcoin is relatively new and more volatile. This difference can lead to periods where their performances diverge. For instance, during the same period in May 2021, while Bitcoin dropped significantly, the NASDAQ showed resilience, highlighting their market maturity gap. Technology-specific trends can also drive these markets differently. A major breakthrough in blockchain technology might boost Bitcoin prices independently of what's happening in the tech stock market. Conversely, a significant innovation or event in the tech industry might impact the NASDAQ without influencing Bitcoin directly. To quantify the correlation between NASDAQ and Bitcoin, we can use statistical methods like the correlation coefficient. This coefficient ranges from -1, which indicates a perfect negative correlation, to +1, indicating a perfect positive correlation. Historically, the correlation has been positive, but not perfect. Let's look at a recent example. In early 2020, as the COVID-19 pandemic began, both the NASDAQ and Bitcoin experienced sharp declines. However, as the year progressed and stimulus measures were introduced, both markets recovered and saw significant gains. This period showed a strong positive correlation, driven by similar economic factors and market sentiment. In conclusion, while the NASDAQ and Bitcoin often show a correlation due to shared economic factors and investor behaviors, they also have unique characteristics that can lead to divergence. Understanding this relationship requires monitoring both macroeconomic trends and specific developments within each market. Thank you for watching. If you enjoyed this video, don't forget to like, share, and subscribe for more insights into the world of finance and technology. Leave a comment below with your thoughts on the NASDAQ and Bitcoin correlation. See you next time.